well there. Let's see where we finish off the day here. The S&P basically at the flat line, but on the frame side of it at 63.8980. The Nasdaq up 4.3%, closing out the day at 23,346.27. On the Dow, closing underneath the unchanged line, down about 0.1% at 44,837.56. And the Russell 2000 closing out at 2,256.73. That's down about 0.2% on the day. Now I'm going to bring in our closers panel to Coffee, senior equities contributor and system next gen investing, and Jeff Pierce joining us remotely, our senior manager of derivatives trading here at Now, Alex, you know, not the day we saw it bracing for a lot this week.
Sorry, last week, and just barely, but it keeps going 6 days in a row. For the S&P 500, so 6 of those. I said, this is actually my stand by at. Yet the week will be on the mind of many investors. There's much stuff on the calendar that's going to determine ultimately where we end up today afternoon. That's not for me.
Yeah, it's certainly not from today. Jeff, I want to bring you into the conversation as well. A lot of data this week and the Fed meeting. You know, what are you most focused on?
Yeah, I mean, I think it's clear from today. I really think that the story for investors has really switched to company growth and outlooks away from some of the tariff news. Interest rates, economic data, obviously, are still important. We're going to get a lot of that. And I think in terms of what we're going to pay, certainly on the earnings front, the Max 7, the stocks to get over in the economic data. I mean, jolts the savings, the GDP, certainly PC as well. And for jobs data, it's really going to be a big point for investors.
And just seeing what I talked to Alex at length about Fed meeting and expectations, and I had a guest on the show earlier who had shared the similar sentiment that Alex had expressed, that he really thinks that Jackson Hole is going to be, more of the informative meeting that people might be hoping for tomorrow, as opposed to tomorrow's kickoff meeting at Wednesday's press conference. What are your thoughts there? Are we going to get any important information from this July meeting, or are we going to get more potentially out of Jackson Hole?
Expecting the rates to stay unchanged. Wait for the minutes for good time to see what the split is between the different members. But for now, I think we're not going to have a lot of information to go off. That's an investor really going to be reading Jackson Hole and beyond to hear more.
And Alex, for you, what do you think is going to be the most impactful piece this week of eco data? We haven't even gotten to talk about earnings yet.
Job data, I think, is going to stand in front of that because it's really what is the piece that's going to be the linchpins of the Fed. It doesn't seem like it's going to be inflation. It doesn't seem like any of the consumer sentiment is really resonating with them. So that leaves the one piece that's been relatively volatile versus expectations. That's labor market. Now, recently, labor market data has come in better than expected, and that's going to make the rate cuts keep much down further. It's going to take us 1 or 2 disappointments, and you're going to see that narrative not just change, but quickly change. So, I'm with Jeff in terms of. I hate to say this a couple times today. Like looking for dissenting members. Now, I'm not sure you're actually going to get pen to paper, but when we get the minutes, I think now we're interested to see one of the Fed members actually go down in the center and say that we're going to raise this room. Sure, we will, but that's going to be one of the first things I'll look.
It certainly will be interesting to get the more spoken members that we typically see, and that they've been publicly commenting on that they've been favoring cuts. So that will certainly be interesting for us to keep an eye on. In terms of the jobs report, Jeff, we've seen some of these, sort of outsized reactions to the downside and muted responses to things coming in line or better than expected. Do you expect more of the same with that with the jobs report? If it comes in under, are we going to see that same outsized reaction to the downside, whereas if it comes in line or slightly better, will it be more muted?
certainly possible they were in position that, especially until I, but looking at the facts and where we're probably at, it's possible that you see, outward market anticipate and see a bigger reaction from that. I mean, we look at it, last market grew $2,000 in July from 27 June. See that slight bump in the unemployment rate. I think expectations is that we're hoping that we're going to see the numbers where it's going to match with what a lot of people are anticipating. And to Alex's point, I think we're switching away from where we think the focus point would be, which is that PC, especially the core data. A lot of people expect that to hold steady on the. That's the case. We're not going to see as much reaction there, and the focus is going to be mainly on the job side of the issue.
And not just eco data this week. We of course have a boatload of big ones are here. The Max 7 is coming. For you, Alex, what are you keeping the closest eye on? And I guess also, did we learn anything from Alphabet having a pretty report?
Yeah, I think what we learned from Alphabet is less about the number. I think the expectation is for these companies is the biggest. That's just the reason they're bigger. What's enough industry? Because it looked like it's and basically that same market trading day. So that's what for is that, which is organic around the economic data as well, which is missing economic data. Expectations isn't really so there's a little bit of asymmetric risk there. So if we're hey, things going on, I think far away the impact of the stock most important is these mega cap tech. And I think all of these legitimate Microsoft, Amazon, Apple, it's the order of importance as well. When it comes to other assets, like let's say the treasury market, job data, the Fed talks, it's going to be a little bit more important there. So just depends on the asset class you're talking about. Here's a company
and Jeff, as we continue talking about spending and then what they're guiding for spending for the rest of the year, and I'm sure it's going to be. We get a preview with Alphabet with their increased capital.
Many of those names is not enough. Investors are hoping that the money in these companies that's going to come to making up all those expenses, keeping the margins high. That's over the 40% range. I think that's going to be important. If they're spending $70 billion on AI investment, $60 billion. Next story. Microsoft. They expect especially considering stock-wise, company doing well, and expectation really high in terms of growth of investors.
Alex, you mentioned Apple sort of in the least important scenario here. Is that because of its sort of lagging in the AI race? And also, I guess my follow-up to that is, how important is it that they acknowledge where they stand and if they stand to move forward in that race? Because right now they feel a little left behind.
Yeah, it seems that they've pulled back on their race a little bit. They're trying to win the race. I think they're waiting for their technology to be a little bit more commoditized. Maybe let one of these other names really find the lane that's a driving lane, and then they may do what they did with in the O2 space. They may do what they did